All right, so my next guest warned everyone on this show about a shakeup coming in the market. I think of like the last 3 months that she's been on the show, she urged everyone to sort of lighten up on tech and to begin the rotation into other areas of the market. So let's bring in Main Street Asset Management CIO Aaron Gibbs. And first of all, congratulations. So not only were you right tactically, but you said it's not just getting out of those names, but you got into some other names. They're up big. I'm going to go over some of your track record later on, but let's get an update where you are right now and some of your macro economic observations, because it seems like you're concerned the consumer loan delinquency issue is getting worse, bankruptcies are getting worse, and corporate profit growth is slowing.
Right. So I am worried about that recessionary risk or even slowing down on profits. Let's remember the reason why the stock market has been doing well for the small caps, the value stocks, is because we're expecting rate cuts. And it's not because we expect inflation to disappear right away. It's because we're expecting some type of economic slowdown, worsening employment. So I want to be really careful that there are some risks out there. We're definitely seeing some warning signs. It doesn't mean necessarily it's going to happen, right, but just be aware and be tactical.
They've got to be on your radar.
Yep.
All right, so that's the setup. Now let's talk about your trading strategy, right? Because, we know what you think is going to happen. How are you going about dealing with it?
So one of the main things is, like I said, I really thought the mega caps are overvalued for a long time. So I'm looking at taking money off the table if you haven't already if you're overweight in your large caps.
I mean, you still have exposure, but you're taking some big time profits off the table.
Because just look at risk rewards. U.S. large caps, still one of your safest bets. I'm not saying, put it in cash or put it all in Europe. Definitely, but take on some underweights, take some profits. Overweight, your either large cap valued, mid cap, and your small caps. Get those lower valued stocks because they are the ones that are going to go down less and have a huge amount of
short-term treasuries over long-term treasuries.
I see that just as I see we still have a bit of an inverted yield curve. I think those are the rates that are going to go down the fastest. So those rates going down means the price goes up. I think that's where you're going to get your biggest bang for your buck in the short term.
And obviously, overweight small cap core means that you think this is just the beginning of this sort of renaissance for small cap stocks.
Right. I'm not doing any big picks right now, and I don't like giving stock recommendations if I'm not convicted for at least a 6-month type of holding period. Right now, I think this is just very beginning. I think this is really easy to be tactical, just using ETFs.
All right. So speaking of stock picks in 6 months, in December you gave us a bunch of names. And some were like, the mid-cap, small-cap stuff. But the stock names I want to talk about, two in particular that stand out to me, right? One was a name I'd never heard of before, this Wintrust thing.
Yes.
Up 21%. Are you staying in that?
No, we're out of that one.
You took profits on that?
Yep.
KB Homes, oh my goodness, up 30% coming into the day. And by the way, all that red on the screen, the home builders are killing it again. It's got to be sort of 30, let's call it 32% now. I mean...
It looked like I like undervalued stocks.
But is it still undervalued?
No. And so so Wintrust, I would say, yeah.
You already took that. You took profit on that. But I want to know more about KB, which is up. It's flat now. Maybe some profit taking's already occurred. You're up over 30%. You hold that?
I'd still hold this. I think the homeowners still are a secular long-term trend. And I think with rates going down, you can still see some more potential upside in the next couple of years.
So before I let you go, Jay Powell's, does he have to cut in September?
No, I think I would say he probably is going to have to cut in November. But September, I'm still sort of 50-50. Yeah.
Because I think Wall Street would be very disappointed if they don't cut in September.
No, they will be. But they've been disappointed all year. Let's get used to it, right?
That's true. Great stuff, Aaron. Thank you very much. Congratulations. All right, really, you've been killing it. All right. Hey, folks, last night.